Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. They called us lunatics, hyperbolic and exaggerated when we began touting the word recession months ago, as far back as 2021, and yet here we are now. This past week was absolutely horrendous, giving us a stark reality check by which all economic data is bad. White House officials are working overtime to assure us that we aren't in a recession, going as far as suggesting the definition of recession is wrong. Earnings were both bad, though because they weren't terrible, we began bouncing up. The situation in China worsened, the housing market worsened, inflation continues to be high, and yet, in the midst of all this, stocks are running up, trying to rally with the media touting that they are oversold. There are two main camps of thought. One is that this bull rally makes sense. Though the economy is worsening in many respects, many believe that the worst has already happened and that from here on out it's all an upside. They believe the next CPI data will come lower and that if this continues to happen over and over, the Fed will begin to lower the rates, which will be followed by a huge bull rally that will uplift all stocks and we could potentially reach new record highs sometime next year. On the other hand, there are those like me, who believe this rally to be questionable in all respects. You see, I am going to take more psychological standpoint in regards to explaining why we are rallying up. In 2020, when the economy was coming to a screeching halt and stocks plummeted, the United States government issued policy to isolate the stock market from the pain of reality. While people became unemployed, the Fed made it easy to give everyone cash. Stocks went up on the biggest rally in history and people at a psychological level began to believe that no matter what happens, stock will go up because they can only go up. That is where you get all these funny memes with Jerome Powell printing cash and the saying stonks only go up. We began to see bad stocks go on bullish runs because money was flowing all around. There was really no risk and a large portion of would be risky investments because all companies had to do was file some paperwork and the government would see to fund them ridiculous amounts of stimulus money. This had a very significant psychological effect on investor psychology, because it shifted the manner by which we carry risk assessment strategy. No longer do negative world events matter, stocks go up. What if the economy flips and millions lose their jobs? Doesn't matter. Buy the dip because stocks will go up. What happens if we face a new pandemic like global event such as the new monkeypox? Load up on stocks because they will only go up. What if we go into a recession that could last years? Well, you better take a loan and load up on stocks because they will go up. This is the mentality, the investment approach by which investors are seemingly going by when looking at the stock market. It isn't about getting on the right investment, it's about getting in on as much as possible because things will and can only go up, and this is a very flawed and dangerous logic. You see, the very things that made the stock market so resilient during an economic recession are no longer viable long term. The policies of free easy money for all companies and extremely low rates are no longer a suitable economic policy that can be upheld in the current state of things. As such, investing the same risk-free way in which we did back in 2020 is no longer sound in my opinion. When I look at the awful GDP figures, high interest rates, high inflation and expectation of worse things to come, I cannot help but see this current market rally being the result of investors not willing to adapt themselves to the new changes. I think big money too is helping usher and pave the way upwards only to strangle retail out of money before things come back down. You have to remember, one of the best strategies big money uses is to wait for retail to pretty much all align in one side of the trade, bullish or bearish. After that, big money has no problem manipulating stock value to capitalize on this bullish sentiment and then trap people in it and have stocks move the opposite way. People are blaming misinterpretation of algorithms as the result of the rally, but I honestly think both big money helped push stocks down, and once the news came out, they quickly went to work and pulled the reverse Uno card and made stocks go up. This caught a whole bunch of option trades off balance, especially ones playing options, and made a vast amount of their holdings become worthless as less than 3 days. Let it no go unheard, these are very miserable times we are living in. The GDP fell 0.9% in the second quarter, marking perhaps the biggest signal for a recession. I don't care what the new redefined out of convenience definition for recession the White House wants to tell us, this is not good at all. Even if the CPI data comes out lower than the previous month, it will not be by a significant enough manner that will undo the terrible circumstances by which every low and middle class citizen struggles, and I want to touch on this now a bit more because a lot of FUD is coming from both the government and analysts regarding consumer spending. Even as bad as things are, officials in Wall Street and Washington, D.C. are telling people to remain bullish because people are going out and spending. They are touting summer and people wanting to go out as well, and will display some BS statistics showing people are spending money. Remember, our economy is all based on growth, which happens by getting people to spend. The moment people stop spending, the economy quickly contracts. We enter a recession. The problem with the rhetoric that people are still spending a lot of cash is that even though this is true, the spending is quickly shifting away from good and into services. Funny enough, this too was also something that happened prior to 2008. A key difference is that the rest of the world is also dealing with a recession, so the dollar should retain a lot of its strength by comparison. Now, another thing I need you guys to understand is that every recession is different. The 2000 dot-com bubble recession was different from the 2008 subprime recessions. Every recession has its own unique characteristic that makes it stand apart from the rest, and I think the current one will be because of quantitative easing. The government had terrible policies that lasted too long, and now the damage is done. I still think the Fed is incorrectly managing the situation, and because of that, the longer they continue to kick down the can instead of letting things crash, the worse the upcoming recession will be, which is something I have voiced many times in the past. Right now, supply chains are strained and the war in Ukraine has made energy prices go out of control, but we are slowly adapting and making changes to combat these, and as a result, I don't think the recession coming will be as awful as the one in 2008, but it will still be bad. So now, let us approach the question of why stocks are going up from a very different angle. Based on bond market data, you can easily see they expect a recession as early as 2023, which is why this year data is being touted as where things will fall in the media. The bond market has priced it in, but the problem is that the stock market hasn't, for the psychological reasons I explained earlier. If inflation brings up nominal values, we are still going to see earnings stay flat. This is funny, because in both previous recessions, with the dot-com and the subprime, we saw huge runs in assets that were seen impossible to fall. Everyone is simply unable to see the real economic situation as it is and has fear of missing out, so they are jumping and buying now, thinking there will be another unstoppable bull rally that will take us to new highs. This bull run, in my opinion, is a huge trap, all because of Fed policy. The Fed is raising rates to fight inflation, which ironically enough was brought about by insane market returns. The whole freaking point of raising rates is to combat demand and stifle money trading. But right now we are watching the exact same opposite, which spells horrible news for the future. It is this bullish sentiment that is undoing everything the Fed is trying to do to repair the mess they got us in, and because of that, we will go down. The bottom has not yet been seen, not even close. I think the stock market will retract to the average that it was in back in 2015 based on my own calculations, and that is a relatively bullish outlook. We cannot revert course because doing so would mean breaking the economy apart and causing a manufactured recession, which the administration doesn't want. As such, the steps they are taking are having the opposite result of what they want, which is a rally run, which we are seeing. Enjoy this bull run while it lasts, because big money understands the game and they are making it exponentially worse for dumb retail money who is pumping things up as well. Once they trap you, expect another huge dip. In relation to AMC and GameStop, I personally continue to buy the dip. I am seeing all these YouTubers continue to spot trash, dictating when things will explode and when MOAS will occur. There is no one on earth who can predict this. I remember Superstonk insinuating that the stock dividend would force shorts to cover and drive the price into a bull rally, which was completely inaccurate. I think the biggest downside of being a meme investor is that everyone always feels the need to have a compulsive run with these stocks. There needs to be something huge happening every week, and that is a very toxic mentality. I simply look at the companies, love how they are transforming and improving in their own ways, and continue to load up. I believe in MOAS. I know for a fact these company prices get manipulated beyond redemption, and I am buying my moon tickets in a safe and consistent manner. All I want to say is be careful who you listen to. Buy what you think is right at the price you think is right. Don't gamble with options, and always have a plan. I am with you guys here until the end. I love you all. I am working on a housing market video for some time this week as well, so you guys will get double treated. I highly encourage you to come join my Discord, it's linked below. You can ask me any question you want or come day trade with me and hundreds of other investors. Hope to see you on the next one, and to the moon.